Hi, Marco.
Kim, how's it going?
Good. We stuck backstage for a bit, so sorry to leave you hanging.
All good.
Very well. Thanks for the great introduction. Very excited to cover some hot topics today. 2021 was a blockbuster year for beauty deals with over 400 deals closed. And in this post-pandemic world, it's evident that, the health beauty segment's been a priority for consumers. So from your perspective, what's been the biggest change that we've seen in the beauty sector in the last 5 years?
Yeah, it's been a really interesting sector to watch. And obviously, where I spend all of my time these days, I think the single biggest shift that we've seen happen within the consumer base is really they've gotten smarter, right? I think, over the past 5 years, or maybe 5 is not the right time period, but just in general, I think the level of education on the category has kind of exploded, right? So what does that mean? The consumer is spending more and more time researching and considering his or her purchase decision, and doing so in a variety of new and different media, right? So they're thinking things through. They're going on, first it was YouTube and the rise of sort of the beauty influencer and the educator, and that has evolved now to be a much broader sort of lens. And it's not so much just a traditional influencer. It's like derms and even cosmetic chemists are building sort of big presences in educating folks on like what ingredients do, what brands perform really well, and things like that. That has, of course, spilled into Instagram and now to TikTok, with this sort of combination like entertainment and educational content. And then that's been sort of supported by an ecosystem of people just having conversations about this sort of stuff on places like Reddit, where people are always looking like, okay, which brand's retinol is the most effective retinol? What concentration should I use? What's the right, approach to your beauty routine, like cleanser, toner, serum, and then sort of a moisturizer? What's the order? How do you stack them? How do they all interact? So it's been really interesting to watch, right? Because I think, 5 years ago, you sort of picked a brand and kind of stayed within that brand and had a routine within that brand, and we're pretty loyal. Now, I think people are much more relentlessly trying to optimize their routines in terms of efficacy. And that's, true really in skincare, but I think that same approach is now extending itself to hair care, right? If you think about hair care, 5-ish years ago, 95% of what people bought was shampoo and then a conditioner, and that's it. And then maybe you buy a leave-in conditioner. And now we've seen brands, develop and innovate in the product category with things that, make a hair care routine kind of look like a skincare routine. So, I think, look, part of this has been driven by just the explosion of innovation in the category and people coming up with new, unique and differentiated formulations. But it's also, folks were sitting at home a lot in 2020 and spent a lot of time on the internet. And, that time on the internet coupled with a broader, trust the science kind of methodology or narrative that was, embraced by everyone, just sort of about globally everything that was going on, led folks to do their own kind of independent research and, consult with not necessarily like Encyclopedia Britannica, but consume content, in the places that they like to consume content with the goal of getting smarter. And so, what that has meant for brands, right, is that the story is no longer just sort of some very aspirational lifestyle kind of a component to it, right? That's obviously still important, and the sort of founder story and the aspirational element to it and the ingredient background and things like that are really important still. But I think it all increasingly has to get backed up with really high quality, efficacious formulations. And so, we're seeing actually, I think it's a good thing for the industry because I think the quality of products in general has been kind of going up over time, and people are getting more results maybe than they used to.
Yeah, it's funny, we talk about the number of touch points you mentioned, right? Whether it's different social channels, could be Reddit, et cetera. I remember reading a McKinsey study a few years ago. The average consumer has 4 touch points with a brand before converting. And now the recent speakers are saying it takes 10, touch points potentially, sometimes when someone's discovering it. And another interesting thing you mentioned was kind of like, what is the brand value? Like, what are sort of the kind of core stakes that these new not just technological innovation, but like what they stand for. Clean beauty, for example, was for many years ago, that was a reason to exist and a differentiator. Now that it's kind of table stakes and no longer a unique value proposition, how, like, with this in mind, can you kind of walk through an example, like why someone like Unilever was attracted by Paula's Choice?
Yeah, so I think you're 100% right that, 5 years ago or 10 years ago, like clean was differentiated enough in the industry that was the reason that a brand could exist. Now, it's not just table stakes, it's people are understanding like what does clean actually mean, and what are the various sort of standards that you can adhere to, what are the levels of clean, and there's even been a little bit of a sort of not movement backwards, but movement to question why something is bad and what concentrations make it bad, and whether you're leaving efficacy on the table for something that doesn't have harmful qualities to it. So it's been a really interesting evolution of the market. In terms of Paula's Choice, right? They are kind of the OG, original clean brand. They had been for a long time. Paula herself, the founder, had really been one of the first people to go out and challenge the preconceived notions or the sort of establishment of beauty companies on what they were including in their formulations. And she was pretty controversial for a long period of time. But I think, and part of her message always was about educating and empowering consumers to make their own choices, right? The choice in Paula's Choice is not really like Paula making that choice for you. It's educating consumers to make their own individual decisions based on what they, are comfortable with and what they need their skincare to do. But why Unilever bought Paula's was not because it's a just sort of clean beauty brand or the biggest clean beauty brand or anything like that. I think the way that they viewed it is about that sort of empowerment and education component to it, whereby it was a platform that was able to offer everyone a highly personalized routine, in terms of, okay, we're going to put out all the sort of educational content, but we're also going to demystify the sort of skincare landscape a little bit, and help everyone get their way into a customized routine that really serves their needs, right? So they have, a sort of a very robust global direct-to-consumer platform, that operates across North America, Europe, and Asia, all owned websites, all sort of directly served, which was unique. And in each of those markets, they were able to sort of personalize the customer's journey across those various touch points. I completely agree with you. The number of touch points has exploded over time, and they were able to sort of, serve people the relevant content, lead them to the right products for them. And, because the formulations are excellent there, the level of repeat purchase behavior was exceptional, right? The consumers, once they start using Paula's Choice, they have such a favorable experience. They love the product, they love the efficacy. And because the routine is so personalized to them, that's something that they can't get elsewhere. So, I think the transaction was phenomenally successful for them, because it really addressed a segment of the market and really a channel that, obviously they're familiar with, but not in the same way with the same set of rich capabilities globally, that they bought with Paula's Choice.
I mean, it's interesting to see the D2C approach, right? Can be quite different, very data-driven and customized. Some are more Amazon-centric. I think, I guess the last 18 months or so, there's been, that playbook on D2C versus wholesale has, had challenges. So besides whether it's like clean beauty or a unique D2C strategy, what exactly are conglomerates looking for in indie brands? Like, what is it that they aren't able to do themselves with their vast resources, that they seek out in the kind of value add to their portfolio?
Yeah, so the strategic, a lot of people have this sort of misconception about M&A in general, is like you just sort of buy another company to get more market share, to get bigger, and if you pick up finance 101 in business school, it's what are the reasons? Okay, increased scale gives you leverage with suppliers and things like that. Beauty M&A is very different, right? If you think about the scale of the global strategics, whether it's Unilever, L'Oreal, Procter & Gamble, whatever, and the size of the brands that they're buying, they're not really moving the needle in terms of market share in a huge way in aggregate beauty. Now, within certain subsegments, that's perhaps not the case, right? In some niche categories, the number one, number two, number three brand could be 50 or $100 million in sales. But what they're buying is really capabilities, right? And those capabilities are different in every case, but it's, with Unilever buying Paula's Choice, the capability with global digital and customization, right? You look at other things like Procter & Gamble just buying Mael, right? They had nothing within their portfolio that serviced the textured hair consumer in the US. I mean, not nothing, but they had a sort of very small presence in that and needed to enter that or address the gap in their portfolio through M&A because they realized that doing it organically would take an inordinate amount of time and had, pretty significant execution risk, right? Because building a brand for that category, it's really important to be authentic and, sort of built by the consumer, that type of person for that category. And so, by buying something, they immediately sort of made their presence known on the scene, address the gap in their portfolio. Other things that folks will buy companies for, again, it's technologies, it's consumer bases, it's formulary approaches. It's got to be something that's unique and that you can't kind of build internally.
And that expertise, I guess, in that, say, direct to consumer, customer acquisition strategy, those costs have been on the rise. And so a lot of brands are trying to figure out how they approach wholesale. So could you kind of talk through and explain like what aspects of like a wholesale or omni-channel strategy make it interesting for brands?
Yeah, I mean, I think, historically, digital was this sort of easy operating environment in which to scale, right? Where you could get to some level of revenue, whether it's 30 million or 50 million or something like that. Not easily, obviously. I don't want to take anything away from the entrepreneurs that have done that. But it was
blood, sweat, and tears to get to that 50 million in revenue.
I wish I had a brand that did $50 million in revenue instead of doing what I do. But,
actually, by the way, how many years does it take most brands to get to 50 million in revenue?
So most brands don't get to 50 million in revenue. Okay. That's the part that everyone sort
of for the audience here, just so you know.
But it depends on the journey, right? There's some brands that are founded and sort of hit that in 4 years' time, and there's some that are, you don't hear about them and they sound like overnight successes, but in reality, the founders have been working on it for 15 or 20 years, right? It's really case by case. The acceleration is usually pretty quick, right? So there's not a lot of brands that'll be doing 10 million a year and then all of a sudden, 10, then 11, then 12, and 40 years later they're at 50. It's something catches, and it's not, I don't want to use the word viral because it's not necessarily like you just get mentioned by the right influencer. But the sort of the flywheel starts to click and then the snowball starts rolling down the hill, and it happens. The brands that get acquired at that phase are usually looking at sales trajectories of growing 30+% a year. Right. And so, they get to some base, they discover what the unlock is, whether the consumer moves in the right direction or something else happens, some sort of catalyst to really propel them to that level.
I was going to say on the subject of catalysts. Yeah.
No. And so I was just going to try and answer the omni-channel question since we got distracted a little bit about how hard it is to get to 50. Again, that D2C environment, a few years ago was sort of easy and you could just be D2C and no one really had any problems with it. I think what we saw is a lot of brands sort of reach a natural ceiling where the incremental member of the audience to acquire just gets more and more expensive. And that ceiling has unfortunately been lowered a little bit because of the changes to the online customer acquisition environment, right? A lot of brands crowding the marketplace. And then now that, Instagram and all the other sort of platforms are, because of the privacy changes, becoming less and less effective at targeted advertising, there's been a pivot, I would say, back to omni-channel. I think omni-channel is a really interesting approach to have because, in retail distribution, you build this tremendous level of awareness, almost not for free, right? But just being on shelf at a major retailer is an important validation of a brand for a very broad base of consumers. And so if you can perform on shelf, you should see a halo effect across your D2C business, right? I think one of the risks that people foresee when you launch in a major retailer is that your own D2C business will fall off a cliff. What we found usually is, yes, there's some shift of existing consumers going to the new channel, but it's more than outweighed by people becoming aware of the brand, and then converting either online or in store. So the pie gets bigger.
So on the subject of omnichannel diversification, does it matter if a beauty brand strategy is like just doing Sephora or and having that dependence on one retailer? What's the viewpoint on that?
Yeah, so it's funny. In a lot of industries, again, you talk about the textbook, right? And everyone talks about customer diversification and how really important that is, because you don't want to be too reliant on one retailer. I would say in beauty, it's almost the opposite. Some of the most successful brands have really leaned into a partnership with a single retailer. It's got to be the right retailer, but you can build huge scale with the right partner on a not necessarily exclusive basis, but by really leaning into it. So a great example of that is Drunk Elephant, right? They were when Shiseido bought them, a largely Sephora business. They had just consistently expanded their presence in store. Their sort of velocities were off the charts, and that wasn't a barrier to that being a successful M&A process at all. I think by leaning into with Sephora leaned into them and helped the brand grow. And so, that performance is driven by that partnership mentality. So I would say for beauty brands, generally the best approach to an omnichannel launch is not to try to be all things to all people. Pick a highly strategic retailer initially, partner with them, lean into it, support it, because you have to succeed, you have to perform on shelf, right? And different retailers have different sort of productivity benchmarks, but everyone wants to know, how are you performing relative to your competition? Are you, hitting the velocity targets? If you're outperforming them, then there's an obvious sort of, you kind of lead the witness down the path of, okay, we are doing more, in units per store per week than our next biggest competitor. We have this much space today. We can probably go to, 1.5 or 2x as much space within this retailer alone. And if we're performing with this retailer, then there's no reason why we wouldn't be able to succeed in other retailers down the road.
Okay, so on the notion of partnership, we have, say, Amazon, for example. It's a great discovery tool. Nowadays the consumer is going there to search, not just with a specific product in mind, but general discovery. I would say the analogy would be even in China, for example, 80% of search is happening on Tmall, like the major e-commerce platform, versus Baidu, kind of the Google of China. So when a brand is thinking about omnichannel, they're split between their own .com and Amazon. What are the pros and cons of kind of going big on Amazon?
So I think you're absolutely right, and the stats in the US are probably about the same in terms of number of searches that originate on Amazon versus on an actual search engine. And it's a great, vehicle for discovery. So I think you kind of have to be there. You also have to be there to control diversion, right? Because if a brand is not selling directly to Amazon, then some entrepreneurs, for lack of a better word, will buy the product and resell it at Amazon, and then you can't
using the word in a negative way. All founders deserve some level of respect.
Brand founders, yes. Anyone that is, trying to make a buck at a brand's expense and at a founder's expense, I don't have a ton of respect for, diverting product on Amazon. But, you have to be there, right, to be able to control brand messaging, control diversion. I think major retailers have accepted that and actually embraced that brands need to have a presence on the platform to, make sure that the brand integrity is maintained. That wasn't true, by the way, sort of 5-ish years ago, but now it's someplace that, people understand you need to be there. And I think it's at the right time, sort of a nice channel to have. There's a ton of replenishment business that goes through there. The challenge is it's really hard to build a comprehensive brand on it, just given the nature of the platform and the way that the consumer shops it. So I think it's a logical step at various points through the process, but you kind of have to carefully manage assortment, and you're obviously going to prefer that consumers transact through your own D2C site, you do tend to see a little bit of a consumer shift. If you suddenly launch on Amazon, people are like, oh, well, I'll just Prime 2-day it, as opposed to waiting for, the brand to ship it to me in a week, and I have to hit a, $35, $50, $75 free ship threshold, as opposed to just one click and it's done. So it's a delicate balance, but I think net all brands kind of need to be on Amazon. I think it's a great volume driver. It's no secret that, in terms of wallet share, Amazon is enormous. So you're really missing out by not being on there.
Actually, no, there was an indie brand I spoke with, and somehow some resellers have gotten a hold of discounted product, and then we're bidding on Amazon, to get that traffic. So yeah, you have to be there no matter what.
Yeah,
and
you have to be there, and you have to kind of control brand messaging, and there are a lot of great agencies out there that can help with that. Just controlling.
So kind of taking a step back, like, what's your M&A prediction for 2023? Are we going to be going to pick up versus last year, or based on your crystal ball and what you're seeing?
Yeah, so I would say, look, 2022 was really a tale of two halves, right? 2021, explosive, all-time high volume, something that I think is really kind of irreplicable, because you had a whole bunch of stuff that was on hold because of COVID uncertainty spill into 2021. You also had, in the US, hypothesized tax law changes that never actually materialized, but drove a lot of particularly founders to sell earlier. 2022 first half, I think, kind of continued with that trend. But what happened was, as sort of a confluence of a bunch of different factors in terms of just general global macro environment, supply chain crisis, war in Ukraine, public equity markets falling off a cliff, all led to a lot of people moving to the sidelines in sort of the second half. There were still deals that got done, but they were kind of highly strategic, very, high quality businesses for people that needed them. And I think, interestingly, what we saw was the investor community sort of went right to the sidelines, partially driven by financing markets, meaning lack of availability to borrow money to fund transactions. The strategics did not close the door to M&A entirely, but they did raise the bar. So, I think 2023, we're seeing so far kind of a gradual reopening of the market. I think people have gotten an understanding that, while the economic environment may not be as strong as it was in 2021, it feels like it's not falling off of a cliff. And, I think people have pressure to deploy capital. So I think we'll see sort of a reopening. We're starting to see it now. And we're also seeing a ton of interest in the beauty category viewed more holistically. So there's been a focus on, acquiring just brands. I think folks are looking, especially on the investing side, with a little bit of a broader lens, saying, hey, we want to be exposed to beauty. It doesn't necessarily need to be a brand that we're going to go try and sell to a global strategic down the road, right? And so they're moving up the value chain in terms of looking at, contract manufacturers, service providers, agencies, things like that. And then kind of down the value chain too, to four-wall concepts like whether it's anything from a med spa, which we're seeing a ton of enthusiasm for, and even in, a facial bar concept, a nail salon concept, and sort of hair concepts. Obviously, Dry Bar was a great example of that a few years ago. And so there's a lot of entrepreneurs coming up with exciting new concepts there to transform and reinvent some of these areas in which beauty dollars are being spent, where I think we'll see a ton of activity.
So when is the right point in a brand's growth for them to start thinking about an exit, an acquisition, bringing out growth capital? I think that's a big question, but answer the parts you want to.
Yeah. Well, so it's never too early to start thinking about it, right? And you should always kind of dream big. I think there's an interesting, if you look at a brand's life cycle, right, there's sort of the founding and ideation phase where you're just getting off the ground, figuring out what you stand for, developing a portfolio, and then the snowball starts rolling. And like you said before, that timeline is not universal, obviously. But I think what you want when you want to start thinking about selling is when you've gotten a really strong brand distributed in your core market relatively well, right? So you've got maybe you started online, you then launch a major retailer, right? Sephora, Ulta, Target, something like that. You've got placements and traction. You've got a couple of years of sort of trajectory of proven growth in both, individual unit velocity and also space within the retailer, right? So you not only are your SKUs, for each SKU, you're doing more in revenue today than you did last year, but you're also have more SKUs. So you sort of get a double impact on your growth. But you haven't tapped out every market and every sort of single growth opportunity, right? Because what happens a lot is people will wait to sell. And, if you started to sort of move outside of your core product positioning, you're in every major retailer, all of a sudden the buyer universe is going to say, like, this is great. You may have built a great business. It might be hugely profitable, but we're not going to pay you, the sort of top of the market multiples that people like to talk about in this category if they have no ability to grow it, right? So I think it's really, you have to be beyond proof of concept. You have to have real traction. But the optimal time, at least from a, multiple perspective, is kind of before you've exhausted the next 5 years of runway.
Is there a revenue number or range that applies to, generally speaking?
It is different by by product category and by channel, but I would say, in general, strategics start to get interested at roughly the $50 million in revenue level. I think growth capital, you can get access to that much sooner. And there's a great ecosystem of investors sort of up and down the food chain in terms of fund size that are really value added and can bring a lot to the table and help entrepreneurs, take that sort of interim step. And just they've seen the playbook before. They know what the strategics need from a, kind of back of house perspective. And if you look at the numbers, and we've run them, I think something like 75% of the brands that have ultimately exited to strategics for, the really big prices have had an interim growth capital step where they've brought in a partner to help them, execute against the plan and take certain, maybe build out a team, maybe build out a finance function, maybe work on, global compliance, trademark registration, things like that. There's all kinds of sort of things that I think some of these folks are very, very thoughtful about. And so, yes, growth capital helps accelerate with, the money to the balance sheet, also helps the founder de-risk and maybe swing a little bit harder for the fences because they know that there's some capital in the bank for even if things go wrong. But also the partners can be really value added.
And kind of to round out our conversation, I'm thinking about our audience today. Is there anything brands can do to make themselves more visible to be acquired or get attention from investors? Besides, of course, being listed on Launchmetrics beauty rankings, but what else can they do?
Well, and besides hire Financial Raymond James to represent them.
Correct. And that
yeah, I mean, unfortunately, there's no silver bullet here in terms of like what gets people onto the radar screen, other than kind of the basics of just continuing to execute a strategy, right? Build a great business that, has a unique and differentiated positioning, that has products that are solid and work, a thoughtful distribution strategy with good performance. And like that all then kind of gets out there into the market, right? We live in a world where all of the strategics are, have M&A functions that are kind of canvassing the world and looking for the next big thing, right? It's a core part of their strategy. Most of the big conglomerates have been built through M&A, and it's something that, that has driven a lot of sort of shareholder value for them. So, and it's also like a pretty transparent market environment. If you just think about, at least in the US, whether it's Nielsen or IRI or NPD or, depending on what channel you're in, there's pretty transparent visibility that's not necessarily like public, go to sec.gov type stuff, but everyone is tracking it in both the investor and the strategic universe. And so, those rankings and those performance statistics are ultimately what put people onto the radar screen. And then, some finance guys say like, hey, look at this brand, it's really outperforming. And if the brand truly is unique and differentiated, and the sort of more functional leaders at the very strategic see it and kind of say, hey, that's really unique. That's what gets people interested.
So actually we have some questions from the audience. So I thought we'd give a chance to air those out. Someone's asking, what advice would you give to a small or medium-sized beauty brand this year, as many are saying that there could be a recession or economic crisis in countries globally? And I have a follow-up question to that, which is sort of related, which is what's more important nowadays, this year? Is it like top line sales growth or being more profitable / burning less cash? Like if you had to choose, is it better to have slower growth and burn less cash, or is it always go for a top line?
Yeah. So, I mean, that's a perfect follow-up question, because that's exactly where my advice would go for a smaller brand, right? Which is to focus on delivering profitability. Like growth obviously continues to be important. You want to be growing, you want to be a bigger brand to get sort of up the food chain and interested in someone buying you, or frankly not, just generally being a bigger business generally means you're making more money. But whereas in the past, I think it was sort of growth at all costs, and the next funding round is 6 months away and people are calling me every day. I think that sort of rush of free capital has evaporated, and people are looking more for, fundamentally viable business models with unit economics that work, right? And so even if your sort of corporate profitability level is not massive, as long as fundamentally, like when you acquire a customer online, you sell them the product, right? Your sort of contribution margin on that first sale is positive, and hopefully, like significantly positive. That fundamental business model needs to be in order for you to have a viable business kind of long term. And so I would say, extract the costs there, scale back on the sort of swing for the fences growth initiatives, and focus on just building a core profitable like line of business that works, and the scale will get there, right? And if you're growing at 20% as opposed to 30%, that's totally fine.
Okay. All right, I'm just checking it. So any questions from the audience, please pop them into the Q&A chat. We have one here now. Let's see. Can you explain what are the fundamentals that acquirers are looking for in a great business? You kind of just mentioned like focus on, good unit economics. Like, can you be more specific? I guess, is there like a golden list of 5 things that people look at, or, how does that criteria work? Maybe it's different for different buyers. Maybe
I wish the list was only 5. To make my job a lot easier. But as anyone that's been through due diligence process knows, there's probably 1,500 questions that get asked at the various points through it. But if, what does it boil down to? Okay, so solid unit economics of the product. That means price point that is high enough and appealing, or that is appealing enough to consumers that they're transacting, but leaves you with a favorable margin structure, right? And that usually means gross margins, again, varies by product category, but definitely north of probably 60%. And higher than that if it's direct, because you've got to think about your sort of retailer markups. Even if, by the way, you're a D2C only brand, you need to have a high enough margin structure that someone can envision you going multi-channel, right? And so, you're not getting 100% margin. You've got to have a brand positioning that's strong and I mean, unique is a hard word to say, given that there are probably, 20,000 beauty brands out there. But strong and has a point of view. You can't try to be all things to all people, right? So I think some people are trying to take kind of the kitchen sink approach to their brand. So we're clean and we're scientific and we don't have fun animals and we do ESG and we do this and we do this and we do this and we do this, and that I think starts to confuse the consumer and feels inauthentic, right? You got to kind of lean into your strengths and play where you can win. Then product portfolio. 1, does the stuff work? Right? Very easy, but not so easy to do sometimes, right? But is it efficacious? And is it, are there either clear heroes that we're known for, that we, being the brand, are known for and do better than anyone else, or, or somehow different? And then is that range broad enough that you can envision a growth trajectory that it turns into a real brand and it's not just a product business, right? Because if you only have one SKU that performs and everything else is sort of this long tail of underperforming stuff, then you're really a product business, you're not a brand. Look, and then from there, it's like the usual stuff. Distribution needs to be there, performance on shelf needs to be there, and so on. And then kind of from a profitability perspective and from a scale perspective, we sort of talked about the $50 million in revenue number. You need profitability is increasingly important. And even if it's not there today, you need to at least be able to articulate a very clear vision to get there on some realistic time frame. And a realistic time frame is, used to be, oh yeah, 5 years out we'll become profitable. Now it's like, no, you got 18 months.
That's a very different timeline.
Yeah.
Yeah. Okay, interesting. And okay, so there's another question coming in. There are a lot of indie beauty brands available today, thousands. But do you see them taking more of a prominent place in the near-term future of the market, or do you see them more just a trend, like a passing trend? I guess, like, how many of these really transcend to become more of like lifestyle status versus like a one-hit wonder, one hero product-based company? Yeah, what's your take on that?
So I think the indie phenomenon is here to stay, right?
Mm.
If you just think, okay, let's dial it back to like, what's the 30-year timeline of the beauty industry? It used to be that you could only advertise in kind of magazines and on TV. And so that meant that the only people that could reach consumers were sort of the big legacy brands. I think now, given the proliferation of different areas in which you can interact with consumers at a lower cost in a more personalized way, maybe it's slightly higher cost now, but it's certainly not what it used to be. I think people are always going to be looking for indie brands, and they're going to be looking for innovation, and they're going to be looking for something that speaks to them in sort of a more unique way than the necessarily one size fits all brand approach that some of the bigger brands have had to take. So I think the phenomenon's here to stay. I think a lot of the brands that people are building are truly sort of the next generation of forever brands, right? I mean, some are flash in the pan, kind of start hot out the gates, launch with 1 or 2 products, get a lot of buzz, and then sort of peter out. But others, I genuinely believe, are like have carved out unique differentiated positionings. They have exceptional customer loyalty, exceptional customer enthusiasm. And depending on the category, right, consumers tend to be pretty sticky, like especially in like skincare, which I feel like we spent a lot of time talking about. But like, once you have a routine that works, generally speaking, you don't really see the need to change constantly. You might sort of dabble in a new product, or you might try something new, but like the switching costs there are fairly high. Or people are not, if they've got something that works, they're not necessarily trying all that many new things. And so, these brands have the potential to become, I guess, I don't really want to say lifestyle brands, because that to me means like, okay, we're gonna, then go launch like apparel or something.
Right.
But I would say lifetime and forever brands. And just going back to the M&A conversation, right? No strategic buys something that they think is a trend that's going to peter out in 3 years. Like, they're buying these things with a 50-year long-term view of what a brand can be.
Actually, on the subject of lifestyle brands, right? You have a lot of like fashion and luxury houses who have their own beauty lines now, whether, Gucci, et cetera. So how do you see that impacting, the beauty ecosystem in the short term and long term? Yeah.
Yeah, I mean, I think that that's not really a new phenomenon, right? Like, there's always been, fragrance affiliated with every sort of fashion brand, and that's a category that lends itself to really, really well. And I think the same is true of color, right? That is a sort of seasonal and trend-driven business, and so it makes sense that someone that is an expert in operating in seasonal and trend-driven, apparel and accessories can do that really well as well. I think you're probably not going to see a ton of, and I would love for one of the brands to prove me wrong, but you're not going to see a ton of that in, skincare, hair care, things like that. They may dabble, but I don't think that it's something that's problematic for the beauty industry by any means, because I think the industry is growing so rapidly and sort of just gaining wallet share relative to other consumer categories that, like, the more enthusiasm that comes to beauty as a whole, it's sort of like the rising tide lifts all ships.
And are there any particular like sectors that are growing a lot faster than others that people might not already know about? That you're saying?
Well, I mean, I think one of the interesting the fastest growing sector in prestige this year, I think, was hair care. That's one that's
Okay.
sort of seeing the expansion of the routines, like we kind of talked about in the beginning, in terms of it used to be just shampoo and conditioner. Now there's a whole range of products, you know, and a little bit like pioneered by brands like Olaplex that do different things and have unique and efficacious formulations that like genuinely can change the sort of composition of your hair. So I think that's an exciting category that people may or may not know about. Skincare obviously has been super active. I think color cosmetics is actually coming back quite nicely. There was sort of a, you know, nobody's going out because we're locked in a room and we can just turn up the filter on the Zoom as opposed to putting on makeup, which is exactly what I did this morning.
Filter must be better than mine.
So, but that's seeing a nice rebound as well. So, you know, maybe that's known, maybe that's not.
Okay. And we have a question. Do you see influencer created beauty brands continuing to come, like pop up and have staying power, or do you see this trend proving otherwise?
So I think they'll continue to pop up because the barriers to entry for an influencer to sort of have a small beauty brand are fairly low. There are a lot of great contract manufacturers out there that can help you develop a line fairly easily. And if you have, you know, 10 million followers on social media, it's very easy to sort of put some product out there and have them, you know, engage with it. I think the hard part is developing staying power.
Okay.
Some of these brands have sort of launched and sort of just then gone nowhere because once you step outside of your kind of free audience of that particular personality, it's very hard to then, you know, go and acquire incremental customers and things like that. That being said, you know, for brands that are built intentionally to be forever brands and not just to monetize a follower base, which I think the consumer is getting increasingly fatigued with, where the influencer happens to have a large social following, but has a reason to be in the category, has an authentic story as to why they've launched this brand other than, you know, a sort of just cash grab. There's no reason why they can't develop staying power. And the brands that are going to be successful are the ones that, again, can sort of use the influencer to jumpstart their brand, get to a certain level of scale, get to a certain level of buzz out in the market, right? No one's better than influencers on doing that, but the brand has to extend beyond the person fairly quickly, right? And really stake out a position that's not just, you know, I'm, you know, Marko skincare brand, but Marko have a point of view on skincare that is unique and differentiated. And here's, you know, the 5 things that I do better than anyone else, that I do differently. And it's so different than, you know, a doctor founding a brand or some other type of person. They just happen to have a lot of followers on social media, but they can't take the approach that it doesn't need the rest of it, right? It needs the foundation of a real brand in order to have the staying power.
Well, I think I've learned a lot this bit now. What keys to success? When is the time to consider thinking about you know, growth capital versus exits? You know, what creates staying power? You know, it's not beyond just a few hero products, it's a full assortment. The fact that apparently, according to you, most brands never make it to 50 million. So thinking about that number hard. And I really appreciate the time today, and I hope everyone learned as much as I did. And thanks again, everyone.
Appreciate it. Thanks, Kim. Thanks, everyone.